I guess I wanted to go into the details of, inflation and interest rates because I feel like that really sets the stage for what the stock market is going to do. Because the stock market usually is a leading indicator and prices and everything before it actually happens, right? So, do you think we're heading for a higher level of inflation, or do you think growth is going to be suppressed and we're heading towards maybe, lower moderate levels of inflation, but way lower growth in the future?
Yeah, I'm inclined to. When I think about the next 2 to 5 to 10 years, my bias is certainly towards higher levels of inflation. But I also, when you look at the charts of inflation for variety of countries, what you see is, what looked like a massive peak for inflation when you zoom out ends up just being one small hill in a longer journey. And so it's possible that, we've temporarily peaked, or that we find a temporary peak in the next few months, come back down for as much as a few months to a year or more. And that can provide, if we were to just see a local peak, which, like, I'm right now, basically as an analyst, I'm thinking in my head, I've got to be open-minded about the fact that, inflation can continue to grind higher for the rest of the year. If that looks like a situation that's unfolding, I'll have to temper my expectations on the prospects of some type of relief rally for risk assets. When I'm looking at this inflation data and it starts to undershoot, right, then the scenario of the Fed backing off some of their super hawkish talking points, that forward guidance that they've been moving the market with, once that forward guidance that they've been moving the market with starts to reverse course, it's right. I'm not talking about necessarily reversing course on the whole prospect of tightening. Right. I don't need to see them say, oh, we were going to remove $60 billion a month, and now actually we're not going to do that at all. Right. So there are subtle changes in their tone. If they just start to sound less hawkish, and all the while inflation looks like it's finding a local peak, then that opens up the door for what's happened dozens of times across many countries, dozens of times throughout history, which is you start to tighten, market sells off. Look at, the amount of tightening that was expected to be required. Turns out it's looking like it's a bit less. You've got all this money that's been sidelined. People have made good trades. Market hasn't necessarily, had a catastrophic fallout. If we avoid some type of major liquidity crisis, you could see a natural bear market relief rally that exceeds expectations. You could see a total melt up in risk assets for however long. So I think it's mostly about being aware of that key factor, which is bearish, right? That macro fact about the dollar right now, it is bearish as of now, but being open-minded about the fact that can change, and it can change temporarily. It can change very quickly, and it can change temporarily for 3 to 6 months. It can allow assets that were performing poorly as a result to all of a sudden have a really good time. And it can last for months or years. So just about being open-minded and not too, don't get married to a view, right?
Right.